All right, time for the AFEX commodity update. For the week ended 20th of March 2022, the exchange saw more than 64% decline in number of deals, while total turnover surged by over 30%. We have Femi Kehinde, structuring and originating analyst at AFEX, joining us right there in Abuja studio. Good morning.
Hi, Ladi. Good morning.
Yeah, great to have you, Femi. So give us a rundown of activities on the exchange.
Yeah, so for the reporting week, we actually saw a 38% increase in the value traded for the week, as the value traded closed at about 1.12 billion naira. For the volume and the value traded, we actually saw a decline. For the volume traded, we saw a decline of about 4.2% week on week, as 1.9 million contracts were executed this week. And for the number of deals executed, we actually saw a decline of about 64%, as 191 deals were executed this week. For the financial benchmarks, we saw a marginal increase in the AFEX export index of about 0.606% week on week. However, we also saw a significant increase on the AFEX commodities index of about 1.01% increase week on week, to close the reporting week at 486.57 index points. For the volume traded across all commodities, sesame accounted for a significant bulk of the commodities traded this week, followed by soybean, maize, cocoa, sorghum, and cashew. We actually saw the execution of about 1.16 million contracts executed for sesame this week. And for commodities prices, we actually saw a marginal increase in maize prices of about 0.82% increase week on week, to close the reporting week at 234 naira per contract. For paddy rice, we saw a significant increase of about 2.13% week on week, to close the reporting week at about 242 naira per contract. For soybean, we saw a marginal increase of about 0.21% increase week on week, to close the week at 398 naira per contract. For sorghum, we also saw a marginal increase of about 0.12% increase week on week, to close the reporting week at 226 naira per contract. However, for cashew, we saw a significant decline of about 4.13% week on week, to close the week at 1,236 naira per contract. And for cashew, we saw a marginal decline of about 0.3% decrease week on week, to close the week at 688 naira per contract. For more information about our report, you could check our website, which is www.afexnigeria.com, or you could follow us on our social media at afexnigeria.com or COMEX by AFEX.
All right, quite an interesting price movement on the exchange, Femi, but let's take the conversation forward now. Let's, review the market performance, the fourth quarter of the year, including factors that might have, affected the market. First of all, give us an assessment, of the performance, of the commodities exchange for the fourth quarter.
Yes, so we actually saw a significant increase in the level and the value traded for this reporting quarter. That is the first quarter of 2022, as compared to the last quarter of 2021. And this is actually very significant, as this is a quarter significantly away from the harvest, which usually occurs between October to November and December. We saw the increase of volume traded, or number of contracts, for about 24%, as 84 million contracts were executed this week. In terms of our financial benchmark, again, we saw the AFEX commodity index reporting above the Nigerian all-share index of about 0.9% index point. In terms of commodities prices, maize and cashew were actually the top performance, closing the quarter with about 33% increase and 24% increase quarter on quarter. It's quite interesting because we actually saw these commodities reporting above the average inflation for the quarter, which is about 15%. So it's interesting to see that the commodities are continuing to provide a hedge against inflation, preventing the erosion of capital over time.
All right, Femi, that means I should be hedging, with commodities at this point. But, for you, what are the key highlights, during the quarter?
Yes, so in my perspective, I would want to look at the key highlights from a domestic and an international perspective. For the domestic market, we actually saw the advent of the petroleum scarcity and how this was supposed to downplay into the cost of logistics and commodities prices over time. Like we've rightly discussed previous segments of this program, we know that farmers usually stay in areas away from economic hotspots. So people or processors who usually use these commodities will have to procure logistics services or will have to engage aggregators in order for them to transport it for them. So at the end of the day, the price or the cost of commodities is added or priced into the commodities, and it somewhat downplays into either the profit margins of the processors, or it moves downwards to the end consumer. In terms of the international market, we actually expected a lot from the Russia-Ukraine crisis in terms of with regards to the fact that Russia and Ukraine are the largest producers of wheat one of the largest producers of wheat globally, and we know as a country that is largely dependent on wheat, we know how we expected this to honestly trickle down into the cost of importing wheat into the country or other substitute goods that processors will honestly want to move to, since the commodities might have been scarce in this sense. Also, we know the cost of fertilizer and other agricultural inputs, of which Russia and Ukraine are actually major players in this global market. However, these factors did not really play into commodities prices for the quarter, as we saw a lot of the processors, or a lot of the large processors, actually exiting the market as they had been able to stock enough inventory for about 2 to 3 months. So yeah, I mean, we expected more, but the effects of these two events were actually downplayed significantly.
Quite an interesting year for commodities. We've seen most of them hit new highs, with geopolitical tensions at this point. But what is your outlook for inflation at the commodities market, for the next quarter?
Yeah, so it's very interesting to see that the top statistical house in the country actually estimate that the average Nigerian spends over 50% of his income on food. And if you look at how the Monetary Policy Committee had retained a lot of its benchmark, and how this honestly trickles down to the cost of capital for agri players, I believe that these players would continue to, or rather the cost of incurring or the cost of capital that they can access would honestly continue to be too expensive for them, or the financial products will not be suitable for them. And as a result of this, we know that it's either there's going to be a trade-off whereby there will be little produced and there will be too much demand. And following the law of economics, that's demand and supply, you know that more demand, less supply would increase or cause prices to keep moving forward. Also, we know that the dry season harvest wasn't able to produce enough commodities to supply or cater for the need till the wet season harvest. So as a result of this, we know that when the big players begin to enter into the market again in order to procure commodities, there would honestly be a strong upward pressure or demand pressure on these prices, and it will move on an upward trajectory. So we continue to expect that the cost of commodities, or rather the cost of food in Nigeria, which is mostly fed or driven by the cost of commodity, will continue to be on the rise, and this will honestly have an effect on inflation over time.
Right, and looking from an investment perspective, now how should players position themselves, ahead of the quarter?
Right. So thankfully, we have private players or like AFEX Commodities Exchange, which provides a means for capital market players and other investors to get into the commodity space without having to physically own warehouses, buy the physical commodities from the open market, interact with aggregators, and all that. So because of the existence of AFEX as an exchange, we have provided that marketplace for investors like yourself and myself and institutional investors to buy into spot contracts, which is backed by commodities in the warehouse, and trade these commodities in accordance to their investment objectives. So as I rightly said in the early segment of this live segment, it's worthy to note that commodities continue to post a return above average inflation. So it is advisable for investors to get into the commodity space, buy into this contract, hedge against their inflation, and also look for superior returns in these trying times.
All right, Femi, let's see the way commodity prices play out, for the rest of the year and other quarters. Thank you so much, Femi Kehinde, structuring and originating analyst at AFEX. Thank you for coming on. All right, we'll take a moment now.